Hello, welcome to Accounting with Arpit Girl. As you know, we were studying admission of a partner and we have already completed our first two topics. So today, let's start revaluation of assets and liabilities. Let's study general entries of revaluation, format of revaluation account, and then we will solve a question relating to all the topics we have studied till now and especially concentrating on revaluation. Let's start. What is revaluation? What is the need of revaluation? Why should a firm do revaluation? Well, the answer is suppose there is a person who is joining new firm as a partner and he see that that firm is having a building worth rupees 10 lakh, but in their books of accounts in their balance sheet they have mentioned value of that building as rupees 12 lakh. So as the partner will join, he will have to incur a loss of rupees 2 lakh. Then that partner will never want this to happen. So he will insist the remaining or the old partners to bring the value of the building back to its original value, which is appropriate for the current scenario. So for that purpose, revaluation is done. Let's see how entries are posted and how effect to this revaluation is given. So accounting entries of revaluation. Now suppose there is a machinery of rupees 5 lakh, but at present its value is rupees 6 lakh. So there is increase in the value of asset. Now asset has debit balance. Now to increase debit we debit it. So we will debit asset account and we will credit revaluation account as we are preparing revaluation account. Then for decrease in the value of asset, as in the case of our building, value of building will decrease by rupees 2 lakh. So to building 2 lakh and we will debit revaluation account. Then let's see for liabilities. Now the concept is same, just debit and credits are different. So for the value of liability is increasing, then liability has credit balance. To increase credit we credit it. So credit liabilities account and debit revaluation account. We can also say that when liability will increase, it means our expense or our losses are increasing. When expenses are increasing, all expenses and losses are debited. That's why revaluation account is debited. Then, for decrease in the value of liabilities has credit balance. To decrease credit, we debit it. So debit liabilities account, and as it is gain for us because our liabilities are decreasing, so revaluation account credit. Now, one day while going through the premises, I found an unrecorded asset. I found a typewriter which is still working but not recorded in our books. So let's record it now for recording unrecorded asset. As it is asset, so it will be debited, and being our gain, the valuation account will be credited. Then for recording unrecorded liabilities credit, the valuation debit. That's very simple and it's done. Just find out the balancing figure, and if according to those balancing figures we got gains, which means our amounts of profits are more than the amounts of losses, and gains have credit balance, it means our revaluation account has credit balance here. So now to transfer it, we will debit revaluation account and will transfer the amounts to old partners capital account in their old profit sharing ratio. And similarly, for transferring losses, revaluation has debit balance. So we will credit revaluation account, and as this will decrease partners capital account, so we will debit old partners capital account. That's it for the entries. Now let's quickly look into the format of revaluation account. The very simple format of particulars amount, debit and credit. Now you need not go through the entries or format of revaluation from your books and by heart the things given there, because these are very easy with the help of a simple concept. Just look here. Suppose in every question, no need to suppose, every time in every question we are given some adjustments. Okay, just decode those adjustments. For example, our machinery, its value in books were rupees 5 lakh, but the present value is 6 lakh. So we have a profit of 1 lakh. Then in case of building, value was 12 lakh, but the real value is 10 lakh. So there is loss. Now, if you think that adjustments result in profit, transfer it to credit side. If that adjustment results in loss, transfer it to debit side and just find the balancing figure. If you get balancing figure on debit side, that is gain, transfer it to old partners capital account in their old profit sharing ratio. And if you get balancing figure on credit side, that is loss, transfer it to old partners capital account in their old profit sharing ratio. That's it. Now let's look into a question, try to solve that and understand all the concepts we have studied till now with figures. Ready? Okay, now let me take you to every page so that you can have a general idea of what we are going to do. On first page we have our question, then on our second page we have our adjustment, so it is also the part of our question only. Then third page is a blank one, so here we will prepare our working notes. Then on fourth and fifth page we have made format of journal entry. Then on next page we have format of revaluation account. Then on next page format of partners capital account. Then a format of cash account, and finally the format of our balance sheet. Now let's begin. First, we will read the question and will try to solve it. A and B were partners sharing profit equally. Okay, so old profit sharing ratio, please mark here, given equally. Their balance sheet as at 31st March 2020 was as follows: creditors, bills payable, outstanding expense, capital of A and B, cash, debtors, stock, furniture, machinery, land and building. Okay, so all these are general items and we are all familiar with this. Then what are the adjustments given? On 1st April 2020, they admit C as a partner on the following terms. C shall get 1/5 share in profit and he will bring 3 lakh as his capital and rupees 75,000 as his share of goodwill. Goodwill brought by C shall be withdrawn by A and B. Okay, so we have to do entry of drawings here. Then provision for doubtful debt is to be bought up to 5% on debtors for revaluation. Machinery be depreciated by 20% and furniture by 12,000. Again, revaluation. Stock to be valued at 2,75,000. Revaluation. Value of land and building to be increased to rupees 9 lakh. Revaluation. Investment of 35,000 were not recorded in the books, are to be recorded. Okay, then again revaluation. Record necessary journal entries and prepare balance sheet of the new firm. Okay, it means we are going to touch every aspect of the question or of the topics we have studied till now. So, as I told you in our previous video, first thing we do is calculate our new profit sharing ratio. So, as we know, old profit sharing ratio is equal between A and B, and C is admitted for 1/5 share in profit. Okay, then let's come to our working notes and calculate new profit sharing ratio. Now, I am going to take this very quickly and will touch only the part covered in this question. If you don't know how to calculate new profit sharing ratio, you can just go through our previous videos to watch that concept or to watch all the cases and all the methods of calculating new profit sharing ratio. Let's begin it here. Old profit sharing ratio of A and B is 1:1 as it was given equal. Then let the total share be 1. Now as C is coming, so first we will give 1 by 5th to C. Then calculate remaining share, that is 1 minus 1 by 5, that comes 4 by 5. Now this 4 by 5 will be divided among A and B. So A's new share is 4 by 5 into 1 by 2, that is remaining, into his old share, that comes 4 by 10. And same way B's new share is remaining into his old share, comes 4 by 10. So new profit sharing ratio is 4 is to 4 is to 2. Okay, now let's come back to the adjustment. Now it is saying that he will bring capital and premium for goodwill. Okay, but before recording this, let me see here what things we can do directly. As we know that we are preparing capital account and cash account, and these both have balances in balance sheet. So first let's transfer these balances. So capital of A 6,50,000, capital of B 5 lakh, and cash 3 lakh. Okay, let's go to partners capital account. On credit side, buy balance BD 6,50,000 and rupees 5 lakh. Then let's go back to our balance sheet. If you don't remember the value of cash, but as I remember it was 3 lakh, so I'm directly going to cash account and marking on debit side to balance BD rupees 3 lakh. Then let's come back to our balance sheet to see if there are any other point. No, there is no revaluation, there is no opening balance of balance sheet, so we will not record this. Then let's come to our adjustments. C will bring 3 lakh as capital and 75,000 as his share of goodwill. Okay, then let's come to our journal entries and let's record as C is paying us capital or C is bringing capital. So to C's capital account 3 lakh, then C is also bringing premium for goodwill. So 2 premium for goodwill 75,000, and in total firm is getting 3,75,000 as cash. Then this entry let's post to our ledgers also. So first in cash account we will write 2 is 2 C's capital account 3 lakh and 2 premium for goodwill 75,000. As cash is coming, so it will be recorded on debit side. Then let's go to our capital account and record that C is bringing cash. So buy cash rupees 3 lakh. Then next, now we know that this premium for goodwill is distributed among the partners. So for that, let's go to our working note and calculate the adjustment of goodwill. Now here also I will just touch the topic given in this question. If you want to read every method and every case, you can go back to the video of goodwill and learn there. Let's start. First we are given that C is coming for 1/5 share and will bring rupees 75,000 as premium for goodwill. So we will calculate goodwill of the firm, that is 75,000 into 5 by 1, that is reciprocal of C's share. We get 3,75,000. Now let's make our table particulars and A, B and C. Then we will distribute this 3,75,000 in old profit sharing ratio. Then we will distribute this 3,75,000 in new profit sharing ratio. Easy? Yes, and in this method you need not calculate sacrificing ratio. Well, let me tell you, in this question sacrificing ratio is 1:1, and that is very clear. But I am following this method because with this method we can solve every question without calculating sacrificing ratio. Then deduct both the amounts of OPSR and NPSR. We will get 37,500, 37,500 and minus 75,000. Now we will reverse this. 3,75,000 is positive, so we will credit. 3,75,000 is positive, we will credit, and 75,000 is negative, so we will debit. Now let's go back to our journal entry and record this. So A's capital account has to be credited. Okay. Then B's capital account has to be credited and debit premium for goodwill account. Now on combining first and second entry, you can see that premium for goodwill is cancelled as once we have credited and then we have debited. But you will never post any you will never post, I am saying again, you will never post any combined entry. Always try to make separate entries. Now let's record this in our partner's capital account. Buy premium for goodwill A and B 37,500, 37,500. Then let's come back to our entry. First entry is completed. So goodwill bought by C shall be withdrawn by A and B. Okay. So A and B are withdrawing their capital or withdrawing their amount which they got. So this will reduce their capital. So A's capital account debit, B's capital account debit to cash as cash is going out of the business. Now let's record this both in partners capital account and cash account. So first let's come to partners capital account and here we will record to cash as this will decrease capital. So it is recorded on debit side. Then cash as this will decrease cash and cash has debit balance and to decrease debit we credit. So on credit side right. Then this adjustment is also completed. Let's come to third one. Provision for doubtful debt is to be bought up to 5% on debtors. Okay. So let's check how much is the debtor now and how much is the provision for doubtful debt. Debtors are 2,40,000 and provision for doubtful debt is 5,000. But according to 5%, provision for doubtful debt must be 12,000. It means we have to increase provision for doubtful debt by rupees 7,000. Okay, then let's increase. Let's go to journal entries. Now, provision has credit balance. To increase credit, we will credit. So, to provision for doubtful debt 7,000 and this will be transferred to revaluation account. And now this will be recorded in revaluation account. So let me tell you how this will be done if we are not preparing journal. Now, as it has credit balance, let me think it as my expense or my liability. Now, as liability is increasing, it means it will incur loss, and this is to be recorded on debit side. Or you can see entry was revaluation account debit to provision for doubtful debt. So same way it is recorded. Then let's go to our balance sheet. Right, debtors rupees 2,40,000 less provision for doubtful debt, new one 12,000. It gives 2,28,000. Done. Let's come to next adjustment. Machinery be depreciated by 20% and furniture by 12%. So we will break this and solve. First, machinery by 20%. Let's check what is the value of machinery. It's 2 lakh and 20% of 2 lakh is 40,000. Now machinery is an asset. Asset has debit balance. So to decrease machinery or to decrease value of machinery, we have to credit it. So to machinery account. And as this is loss for us, it will be transferred to revaluation account. Then let's go to revaluation account as it is loss for us because value of our asset is decreasing. So it will be recorded on debit side to machinery 40,000. Now as I told you, we will post entry everywhere where it is needed. Otherwise I will have to read question again to search for machinery. So now I will record it in balance sheet also so that I need not read this again and again. Machinery 1,60,000 that is 2 lakh minus 40,000. Done. Now another part of this adjustment was depreciate furniture by 12,000. Let's see what is the value of furniture. So the value of furniture is 1,50,000. Okay. Now furniture is asset. Oh, this page is full. Let's go to our next page. Now furniture is asset. So we will decrease asset. For that we will credit furniture. And again, as this is loss, so we will debit revaluation account. All expenses and losses are debited. Again, let's come to our revaluation account. Now, as furniture also has given us loss, so record on debit side to furniture 12,000. Then to balance sheet, furniture 1,38,000. Then next adjustment, stock be valued at 2,75,000. Okay, let's see what is the value of stock now. It's 2,25,000. Now it has to be increased by, yes, 2,75,000 minus 2,25,000, 50,000. So now value of stock is to be increased. Now stock has debit balance, and to increase debit we will debit. So stock account debit 50,000 to revaluation account 50,000. Then as the value of our asset is increasing, it will give us gain. So all incomes and gains are credited, so it will be recorded on credit side by stock 50,000. Then let's go to balance sheet, and there we will record stock not at 50,000 but at 2,75,000, because 50,000 is just the change. The new value is 2,25,000 plus 50,000, which gives 2,75,000. Now let's come back to the adjustments. Next is value of land and building. We increased it to 9 lakh. Let's see it again. What is the value now? It's 8,10,000. So it means we have to increase it by 90,000. Let's come to journal entries. Land and building account debit 90,000 to revaluation 90,000. Then in revaluation, let's come, as value of asset is increasing, it will give us gain. So all incomes and gains are credited. So buy land and building on credit side 90,000. Then let's come back to this, and here we will record on balance sheet also, that is land and building rupees 9 lakh. Then let's come to our next adjustment. Investment of 35,000 were not recorded in the books are to be recorded. Now we have got an unrecorded asset. Let's see, if I don't make journal, how can I directly post to revaluation? Let's try this also, because in exam, if you are not required to prepare journal, why will you waste time? So as we have got an unrecorded asset, we are getting asset, it means we are earning something, we are gaining something. And as we are gaining, so it will be recorded on credit side by investment 35,000. Now let's, to complete this, let's make journal entry also. So it will be investment account debit to revaluation account, as investment is asset, so it will be debited. Now in our balance sheet also we will write investment rupees 35,000. Then next adjustment. Okay, all adjustments are done. Let's check. Profit sharing ratio we calculated, capital we recorded, goodwill we recorded, drawings we have done, provision for doubtful debt done, machinery done, furniture done, stock done, land and building done, and investment done. It means we have nothing left on this page. Now let's see what we haven't done here. Now here I can see creditors, which we did not record. Let's record now. Creditors rupees 5,50,000, because there is no change, so it will come at the same value. Then Bills payable 1,70,000. This also we haven't recorded. Let's record now. Bills payable rupees 1,70,000. Then outstanding expense 50,000. Okay, this also will come at same value. Outstanding expense 50,000. Now capital. Now capital of A and B are given, but I think this will be calculated in partners capital account again, and their capital of C will also come. So let's leave this, but I don't want to forget this in exam in hurry, so that I will record here as capital, and ABC I will write afterwards. Then let's check asset side. Cash. Cash we will write while balancing cash account. Debtors we have written. Provision for doubtful debt return. Stock return. Furniture return. Machinery return. And land and building also return. It means this page is also completed. Then working notes. Here obviously we don't need any more notes. Now this page of journal was completed. Now here, as journal is completed, but we are having balance in our revaluation account. So calculate balance of revaluation account. Add all the items of debit side and all the figures of credit side, deduct them and arrive at a balance. Here you will get revaluation account debit balance as 1,16,000. Distribute this among old partners in their old profit sharing ratio, which was equal. Equal means half and half. So to A's capital account 58,000, to B's capital account 58,000. Now let's record this, or let's post this in revaluation. But in revaluation we will see if we are not preparing journal how it will come. So we will add 50,000 plus 90,000 plus 35,000 minus 7,000 minus 40,000 minus 12,000. It will give us rupees 1,16,000 on debit side. So on debit side we will write to gain on revaluation transferred to A's capital account 58,000 and B's capital account 58,000. Now next part, our capital account. First we will transfer that gain on revaluation here. So to revaluation 58,000 and 58,000. Then we will balance this. So 6,50,000 plus 37,500 plus 58,000 minus 37,500 for A. Likewise we will calculate for all, and we will get to balance CD 7,08,000, 5,58,000 and rupees 3 lakh. Okay, so let me come to my balance sheet, and there I left space for A, B and C. Let's record their capitals. We get total 15,66,000. Then next is our cash account. So let's balance this also. We get balance as rupees 6 lakh. This is 3 lakh plus 3 lakh plus 75,000 minus 35,500 minus 35,500. Now this 6 lakh we will record in our balance sheet. So cash rupees 6 lakh. I think all pages are done. Let's see. Yes, balance sheet is our last one. That's it. Now the only thing left is to total. So let's come to our asset side and add all the amounts, which will give us 23,36,000. And then on liability side, when we add all the four amounts, we get 23,36,000. Now as both the sides are equal, so congratulations to all of us, as our solution is absolutely correct. If you like the class, you can please like the video and subscribe the channel, hit the bell icon to receive all latest updates. Thank you. This is Accounting with Arpit Garg signing off. Bye bye. Take care. Keep learning. Stay safe. Jai Hind.